Welcome back, everyone. I am absolutely thrilled to guide you through today's explainer. We're unlocking a massive topic today: real estate investing for beginners in the USA. Seriously, we're going to break down exactly how Americans build real long-term wealth through property. So let's just dive right in. Now, right out of the gate, we need to completely shatter a massive reality TV myth. Did you know that many American millionaires built their wealth through real estate? Not by flipping houses, but by actually holding on to them? You turn on the TV and it's all about buying a place, taking a sledgehammer to the cabinets and flipping it in 30 days. It looks cool, right? But real, lasting wealth, that's about patience, not just demolition. Okay, so here's our roadmap for this explainer. 1. The wealth building secret. 2. Ways to invest. 3. How to start investing. 4. Benefits and risks. And finally, number 5, smart beginner tips. All right, section 1, the wealth building secret. How to actually make money. So there are basically two fundamental ways real estate puts money right into your pocket. First up is rental income. This is your monthly cash flow. You buy a property, tenants pay you rent, and that money covers your mortgage and, ideally, leaves a little extra in your wallet for you. The second way is property appreciation. Now, this is the long game. Over time, real estate generally goes up in value. So if you buy a house today, years down the line, you could sell it for a much higher price. And honestly, the most successful investors out there, they're usually benefiting from both of these at the exact same time. Moving right along to section 2, ways to invest. Choose your path. You really aren't just limited to buying a standard house in the suburbs. You could absolutely start with a single-family rental home. It's straightforward, it's familiar. Or maybe you level up to multifamily properties like duplexes or apartment buildings, which basically multiplies your rental income. Then there's commercial real estate. Think offices, retail stores, warehouses. Or if you live near a tourist hotspot, vacation rentals can offer some fantastic short-term income. And finally, we have REITs. I actually want to pause on that last one for a second, because a REIT, or a real estate investment trust, is super fascinating. It lets you invest in real estate through the stock market without actually having to go out and buy a physical property yourself. That means no fixing leaky toilets at 2 a.m., no hunting for tenants. You're simply buying shares in a company that owns and operates income-producing real estate. It's just a fantastic hands-off way for beginners to get a slice of the real estate pie. All right, section 3, how to start investing, a step-by-step plan. Look, you don't just wake up one morning and buy a house. You have to climb a logical staircase. Step 1, build a good credit score. Better credit literally equals better interest rates from the bank, which is going to save you thousands over time. Step 2, save money for a down payment. You got to have some skin in the game, right? Step 3 is absolutely crucial. Research neighborhoods with strong job growth and rental demand. Simply put, where there are jobs, people need places to live. And finally, step 4, calculate your expenses before buying. Always do the math before you sign anything. Let's zoom in on that last step for a minute. The math here needs to be cold and precise. Your expenses are way more than just the monthly mortgage. You've got to factor in insurance, property taxes, and maintenance. But think about vacancies for a second. This is the everyday reality that sometimes your property is just going to sit empty between tenants. And when it's vacant, no rent is coming in. But guess what? The mortgage is still due. You absolutely must build this reality into your monthly budget calculations from day 1. Section 4, benefits and risks. Weighing your options. Okay, let's look at the bright side first. The benefits are incredibly compelling. You get that monthly cash flow from rent that we talked about, plus the long-term property value growth. On top of that, it diversifies your investments. Like if you already have money in the stock market, real estate gives you a totally different type of asset, which helps balance out your whole portfolio. And finally, there are potential tax advantages here in the US, like deducting certain expenses or depreciation. Of course, the exact rules depend heavily on your individual circumstances, but these benefits actively build your long-term balance sheet. Now, we've got to flip the coin and look at the hard truths, because we need to be objective here. Home prices can go down. The market definitely fluctuates. Repairs and maintenance can be sudden and, frankly, incredibly expensive. I mean, roofs and HVAC systems do not last forever. Plus, as we just noted, vacancies will absolutely reduce your rental income. And finally, interest rates heavily affect your borrowing costs. If rates jump, a property that looked profitable yesterday might not make sense today. But look, knowing these risks doesn't mean you shouldn't invest. It just means you can actually prepare for them. And that brings us to Section 5, Smart Beginner Tips. Protect your investment.
Listen, if you take nothing else away from this explainer today, please memorize these 3 rules. First, start with one affordable property instead of stretching yourself too thin and trying to buy too much at once. Second, keep a dedicated emergency fund specifically for those unexpected repairs we talked about. And third, never, ever buy based only on emotion. You might walk in and completely fall in love with the property's beautiful kitchen, but if the numbers don't work, you have to walk away. Real estate is a numbers game, plain and simple. Here is the ultimate truth of the industry. Real estate isn't a get-rich-quick strategy. It's a long-term wealth-building tool. This whole thing is really about the power of compound growth and time. The investors who win big are the ones who just stay steady, manage their properties wisely, and let the years do the heavy lifting.
Because the earlier you learn these concepts, the more time your investment actually has to grow and multiply. We've covered the mechanics, the property types, the steps, and the risks. So I want to leave you with this to ponder for your own financial future. What is your first step going to be? Are you going to check your credit score today? Will you maybe look into some REITs? The journey to wealth always starts with a single, informed decision. Thank you so much for joining me for this explainer, and happy learning.